Welcome back. Well, let's get talking to a couple of companies then. Caplin Point reported what was a good set of Q1 numbers. Revenue grew in double digits. Margins came in steady at 33%. Q1 numbers were aided by new launches. To discuss this and more, we have Vivek P, who's the COO of Caplin Point Labs, joining in. Vivek, hi. Thank you very much for taking the time out. Well, let's start with your revenue breakup. You get majority of your revenues from Latin America. But give us a sense in terms of how exactly did the Latin America geography do for you, as well as the US, which is basically Caplin Steriles.
Yeah. So our base business in LatAm grew well. We're already at a certainly large number at this point compared to other companies that have businesses in LatAm. So at this point, the split is around 82% of our revenues coming in from LatAm. But the US is really picking up pace in recent quarters, and from what it was a few years ago, which was less than 5-6%, today it is close to around 18-19%. So we're happy with the growth at both the markets. Yes.
But could you quantify the growth for us? How much did each geography grow for you this quarter? How much business did you generate in terms of EBITDA from both of the geographies as well?
Yeah, so obviously coming off a smaller base, I think the US grew close to 70%, 69-70%. And the base LatAm business is in around very early teens. I would say that this year the outlook also will be something similar to what we are seeing this quarter. But yeah, I think so far, what we've given guidance out is that we should be comfortably crossing last year, and the US is obviously of a lower base coming in at a higher number.
From ophthalmic products, what is the kind of growth that you're looking at? Any further approvals that we can expect?
Yeah, so we are looking at 2 more approvals, hopefully before the end of the year. The ophthalmic is quite niche as we speak. When it comes to sterile product manufacturing, both injectables and ophthalmics are pretty much in the same manner. And for us, we not really focus too much on the retail space, which is where the ophthalmic part is. But now, with a bunch of approvals under our belt, we might be relooking at that part right now. Actually speaking, we are setting up our own front end in the US, where the focus maximum is going to be on promoting our own label, which is very similar to what we do in Latin America. And I feel ophthalmic is going to augment that piece as well.
Okay. I just wanted to touch upon that plan about starting your front-end business. You have indicated, and correct me if I'm wrong, but you would be looking to source products from CMOs in India and basically start marketing it in the US as well. It would be sourced from wholesalers in the US as well. So your primary aim is to actually become a brand in the US. Why is that so important for you? And in the near term, because of that plan, which is expected to be executed by October to November this year, will it impact your margins?
Look, we've always seen ourselves as much more of a distribution and marketing company with a strong back end. And if you look at our Latin American business, only around 55-60% of the products that we market in LatAm is manufactured in-house. The rest of it is all outsourced, mostly out of China, from very highly quality conscious companies, and also in India. So taking a leaf out of that book, we want to try and replicate the same thing in the US. For us, we feel, commerce is commerce, regardless of which market you're in. So a differentiated business model is more important than anything that is coming out of technology. But in terms of near-term margins, we expect margins to go up because, as you can see, we're still in consolidation phase when it comes to the oncology facility. We're still in consolidation when it comes to API. The US has turned around well, but going forward, when each of them start to break even on their own, we expect fiscal discipline to be maintained at all the units. We expect margins to increase, but I don't have an exact timeline as to when that will happen. But for us, consistency has always been key, and this quarter is no different.
Okay, consistency is key, and this quarter is no different. So you want to leave us with, you said the US grew by 70% in this quarter and looking at 2 more approvals by the end of the year. So what does this mean in terms of overall growth for the US, both for FY25 and 26?
Yeah, we'll do well. Without giving numbers away, I'm sure we'll do well. The only thing I would say is when it comes to sterile product manufacturing, especially for a gold standard market like US, you don't want to be focusing on productivity alone. For us, we have 4 pillars in our company, which we call it as integrity, quality, safety, and productivity. So you want no sort of imbalance in any of that at all. But again, long story short, I'd say we'll do well over the next few years, no doubt.
Just quickly, before we let you go, just a one-word answer. When you said that you expect your margins to move up, any figure that you're targeting, 33% goes to what? 35%? Does it sustain at these levels? Give us an exact figure or a range that we can expect in FY25.
We will be a little bit better than where we are today, but significantly better probably in about 2 years down the line.
Okay, we'll do one thing. We will thank you on that note. Thanks for joining in and speaking to us on CNBC TV18. Let's take a short break. More on the markets and stock-specific action when we return.